Welcome to Global Factline. Subscribe and hit the bell icon for updates. As 2025 ends, America's agricultural heartland faces a crisis. U.S. corn exports have collapsed. Once a symbol of American strength, corn exports have plummeted by 94%, devastating farmers and rural communities. This isn't a typical downturn, it's a fundamental disruption of the global grain trade. The U.S. has lost massive market share and influence, leaving policymakers scrambling for solutions. The crisis is driven by shifting geopolitics, fierce competition, and tough economic realities. Understanding this collapse means examining lost trading partners, new competitors, and the economic pain hitting American farms. In the next scenes, we'll break down the key drivers, the new export landscape, and the impact on rural America. We'll also look at government responses and what the future might hold for this vital industry. The 2025 corn export crash is a lesson in the fragility of global supply chains. Let's dive in. The customer base for U.S. corn has changed dramatically. For decades, China, Japan, and Mexico were top buyers, providing stability for American farmers. Now China has vanished from the list, slashing its purchases to nearly zero. Mexico is now the #1 customer, with Japan and Colombia trailing behind. Weekly export volumes are a fraction of what they were, with no single buyer able to fill China's void. The U.S. now relies on a smaller pool of regional partners, making exports more vulnerable to local disruptions. Just a few years ago, a single sale to China could eclipse all other exports combined. The loss of that market has fundamentally changed the economics of U.S. corn farming. Farmers now face a constrained competitive environment with limited global reach. The U.S. has retreated from its former role as the world's top corn supplier. The export landscape has been rewritten. The consequences are profound. The biggest blow? The sudden loss of the Chinese market. China once bought over 30% of U.S. corn exports, driving prices and planting decisions. Trade wars, tariffs, and China's push for self-sufficiency led to a near-total halt in U.S. corn imports. China invested in its own grain production and found new suppliers, leaving American farmers behind. In 2024-2025, U.S. corn exports to China dropped to almost zero. China's overall corn imports also fell sharply, signaling a strategic shift away from dependence on the U.S. The result, a massive surplus of corn in the U.S., crashing prices and crippling farmers. Infrastructure built for China trade now sits underused. The hope of restoring this trade relationship is fading fast. The loss is a seismic shift for American agriculture. As the U.S. lost China, Brazil seized the opportunity. Brazil expanded rapidly, becoming a global agricultural powerhouse and the world's #2 corn exporter. With vast land, multiple harvests, and a favorable currency, Brazil undercut U.S. prices and captured China's business. Brazil's 2024-2025 corn crop hit 132 million tons, much of it bound for former U.S. markets. Brazil also competes fiercely in other major markets, squeezing U.S. farmers with lower costs and better logistics. This isn't a temporary shift. Brazil's dominance is growing. American farmers now face a relentless, efficient rival. The era of U.S. corn export dominance is over. The global market has a new king. The competition is only intensifying. The export collapse has triggered an economic disaster for U.S. farmers. Corn prices have plunged over 50% since 2022, leaving most farmers operating at a loss. Input costs, seed, fertilizer, fuel, remain high, squeezing profit margins to the breaking point. Many farmers are losing money on every bushel they produce. Farm debt is rising as producers borrow to survive, pushing many toward insolvency. The pain ripples through rural communities. Local businesses suffer, tax bases shrink, and essential services are threatened. The psychological toll is immense as families see their livelihoods and legacies at risk. This isn't just an economic crisis, it's a threat to the fabric of rural America. The collapse in corn exports is hollowing out the heartland. Recovery will be difficult. The stakes couldn't be higher. The U.S. government has stepped in with emergency aid and new trade efforts. The One Big Beautiful Bill Act, passed in July 2025, allocates $66 billion to support agriculture. Most of the funds go directly to struggling farmers, helping them cover losses and avoid bankruptcy. This safety net is crucial for keeping farms afloat and stabilizing rural economies. Federal aid is also propping up farmland values and related businesses. Diplomatically, the U.S. is working to open new markets in Asia, with early deals in Indonesia and Bangladesh. The goal, rebuild the export base, one country at a time, and reduce reliance on any single buyer. New trade deals are slow to develop and offer little immediate relief. The government's approach is twofold urgent financial support now, and long-term diversification for the future. For many, this aid is the only thing standing between survival and foreclosure. The road to recovery is long, but the effort is underway. The future for U.S. corn exports is uncertain. The loss of China and Brazil's rise are permanent shifts, not temporary setbacks. Full recovery to past export volumes is unlikely. The industry must adapt, focusing on resilience, efficiency, and new markets. New trade deals in Asia are essential, but won't replace China overnight. Domestic policy, like biofuel demand, could help absorb some surplus. The 2025 collapse is a historic crisis, reshaping American agriculture. The U.S. government's aid and diplomacy are stopgaps, not solutions. The challenge to America's agricultural leadership is real. The industry's ability to innovate and adapt will determine its fate. The story of 2025 is a stark reminder. Global markets can shift overnight.